So we've looked at swing trading, the monthly, the 2 weekly, and the weekly, and how those timeframes in isolation complement each other. Now we want to look at the overall hierarchy and understand when the full weight of timeframe alignment combines, what that means for our trading. So let's start with a bit of theory and then walk through the charts. So why CRT hierarchy matters. So this is about eliminating confusion first and foremost, and understanding which time frame to trust, why and when. It helps you prioritize your setups. So logically, the monthly carries the most weight. That flows into the 2 week. The 2 week flows into the weekly. So you can prioritize your setups, and I'll explain more on that in a sec. It can help you explain why you were wrong. Sometimes it's so frustrating that you see something, you think distribution's about to occur, we've had manipulation on one time frame, doesn't play out. There's always a reason for that, and that can always be explained with candle behavior. That gives you clarity to make you a better trader. Also, CRT hierarchy stacks confluence. We'll talk about confluence in a lot more detail in later series. When all of these three timeframes align from a swing trading perspective, or whatever time frame you're trading, you're going to get high probability trades. So from a hierarchy perspective, when swing trading, this is how I like to think about it. So we've got monthly setting our direction. So we are getting direction from our monthly time frame based on the phase of price on the monthly time frame. Are we in accumulation, manipulation, or distribution phase? 2 week is often the time frame that I'm actually trading. It's the trigger for entering trades. I'm looking for the same thing: accumulation, manipulation, distribution. But I want ideally my 2 week to sit in context of my monthly time frame. I don't want to be taking trades here that are in conflict. Then I'm looking at the weekly. Sometimes I will take pure AMD, accumulation, manipulation, distribution, weekly trades. Not against doing that if there's enough space in the trade. But if the weekly range is quite tight, I like to execute on the 12-hour, sometimes the 6-hour, so there isn't necessarily enough room. If there is, great. If not, I'm using weekly as my trigger, my timing trigger, my confirmation to take a 2 week trade. Finally, we then have our execution. So like I said, I like to execute on the 12-hour. There's a lot of good reasons that I'll talk about later for doing that. But even if you're executing on, say, the 4 or the 6-hour time frame, you need to see confirmation that price action is aligning with your trade idea. What you don't necessarily want to do is say, okay, I've got full alignment, but actually the 12-hour looks really bearish and I'm looking for a bullish trade. You want price action to align with your trade idea so that you're trading from support in the right direction. So what that means is that when we have full alignment, we can grade that and say, great, we have no reason for price to act against us. If we have 2 in alignment, okay, maybe something is going on. Maybe we need to look as well at the 3-month, the 6-month, the 12-month time frame to see why candles aren't behaving the way that they might. If we have 1 in alignment, then maybe this isn't a great trade. It might play out, but honestly, it might be better for you to just skip the trade altogether. Then, when it comes to execution, I don't really want to be executing on any of these trades if my time frame's not aligned. So that's the final filter. We want to see price action aligning with our higher time frame draw. So what to look for? Firstly, monthly. What phase are we in? Are we accumulating, manipulating, distributing? Depending on the outcome of that, what exposed targets sit in the market? If we haven't manipulated, are we just going to continue higher? If we have manipulated, where are we going to reverse to? 2 week. Is that now aligning with the monthly time frame? If it is, great. Let's start looking for a trade. Okay, the weekly. Does that actually confirm that now is the right time to take that trade? Do we have an active weekly CRT against us? If we do we want to wait for some shift in structure, a new manipulation to occur before we get involved in the trade? And finally, execution. Do we have confirmation that this is the right time to enter? Now, just to say, like, this is the last step, and if you have full alignment and you have competing structure, competing price action on your execution time frame, then you can somewhat be flexible with this. But again, that comes down to monitoring and understanding price action deeply, as well as internal range liquidity, which we're going to look at in the next series. But this is broadly what you're looking for. So we've looked at a lot of examples in here in quite a lot of detail, so I don't want to cover old ground. Something we haven't looked at is this trade here. So on the 2-week time frame, you see that price broke above the high and immediately distributed to the low. So it's not classic accumulation, manipulation, distribution. It's accumulation, manipulation, distribution in the same candle. Let's just look at what actually happened here. So we have a blank chart. We're just looking at 12-hour price action. We can bring in the monthly first and foremost. So our first trigger right here is we are sweeping the monthly high. So price has broken out above the monthly high. And at this point here, we have very bullish price action. So to explicitly mark this out, we have the order block at the base of this price leg. So we have purely bullish price action. Then we have a bullish fair value gap right here. So what price does is it closes above the fair value gap. It creates that imbalance in price. Price then trades into the inefficiency and then looks to go higher. In doing that, it takes the previous monthly candle's high. Then what we see from a price action perspective is we try to go higher, we retrace, we try to go higher, we retrace, try to go higher again, and then we actually shift. Why have we shifted? So first and foremost, we've disregarded this inefficiency in price. This is no longer pushing price higher, so it's irrelevant. Then what do we have? We have a structure shift on the 12-hour time frame. So we haven't yet mitigated the order block, but we have a new bearish order block. So this is the last buy to sell right there. So you can mark that as your 12-hour order block. So what do we have here? We have a sting above the high, and we have price action aligned with a bearish trade. Okay, so that is step one. Something else we do have is a structure shift right here. That is something I'm going to touch on in the next series. So we have structure shift, new order block. We have a sting above a previous monthly candle range high. So now we can look at the 2-weekly. So imagine you can't see how these candles closed. At this point, this candle's in motion. We have accumulation candle. We talked about accumulation candles. What do we look for? One of the types is inside bars. So this 2-week candle did not break above or below its previous candle range. So the next candle then manipulates higher. So we're sweeping not only the monthly high, we're also sweeping the 2-week candle range high right here. So I can mark that also as manipulation of a 2-week high. So monthly is in context, 2-weekly is in context. What about the weekly? We can drop down to the weekly, and then what we see also is that we have this accumulation candle right here, which is the reason that we got this last push in price. This weekly candle closed bullish. So right now the weekly is saying we haven't manipulated, we ran the previous candle. We want to go higher. So price does go higher. It stings into the high, takes the liquidity at the high, and then shifts. So we have a shift also on the weekly time frame. So we can mark that. Now if we go back to our checklist, monthly, we're in manipulation phase. So we are manipulating a previous candle. Okay, 2-week, what are we doing? We're also in manipulation phase. We're manipulating a previous candle. Weekly, we're also manipulating a previous candle. Execution time frame, we have a confirmation of entry. We have a bearish price leg. So at this point here, everything is aligned for this to be a short. Okay, so where do we have targets? We have the previous week's low right here, target 1. Then if we go up a time frame, because we almost work in reverse now for targets. We have the low of the previous 2-week candle. We then go up again to the monthly candle. We have this low down here. Now, from a monthly standpoint, we are only just trading above the high. This was a bullish candle, so we have no confirmation that this is a manipulation candle yet. So in theory, price can continue higher. So I don't want to even think about this target yet until we see this candle close. So this is not relevant at this stage. So all we really have is the fact that we are manipulating above a 2-week candle. Now we can think about time. How far into this 2-week candle are we? Well, we're really close to the end of the 2-week candle. So it's fairly certain that at this stage we are going to at least sort of see resistance here and close inside our previous candle range. So I am interested in this target here. So I have 2 now confirmed targets from my perspective in the market. So what can you do? You can take a short, and before I even do that, I want to show you on a blind or a blank price chart what's going on. So we have pressure coming in, demand in the market. We retrace into the internal range liquidity here. I believe this is, no, actually that's not a sell candle, but on lower time frames, that's a sell to buy. We come in, sell to buy. We don't close above the high. We then get the sell off, structure shift, new order block. Why is this an order block? Buy to sell. What we also have right here in this price range is a pricing inefficiency, a fair value gap. So we can mark that as a bearish fair value gap. What often happens is these fair value gaps, these inefficiencies in price, are internal range liquidity that gets filled before the next price move. So on lower time frames, the exact same process is happening. So rather than spending all day waiting for that to happen, we can just set a limit order. I would probably do it here at the fair value gap, and I would cover the liquidation of this high. Why? Because there's no reason for price to liquidate these highs because it's already happened. So the internal range liquidity price is interested in sits in this area here. So I'm covering the high. I'm getting in at the right place, covering the right high. And yes, we might see the order block mitigated, which does happen, but I don't want to see the fair value gap get tapped and price run away from me. So I need to get in there and I want to target the low. And what ends up happening, we get everything in alignment. We don't even need a second candle because we have such bearish intent in the market that in one candle we just hit our target straight to the low, 2.46R. Why are we getting out here? Because we don't have confirmed lower targets. That is the lowest target on the 2-week. This is still a bullish candle, so we're expecting at this point price to trade higher. We don't have any of this context yet. So that is CRT hierarchy. This is how to swing trade price. The reason I do this is because on the 12-hour time frame, I only need to check the charts twice a day, and it means I can cover so many pairs. I cover over 32 Forex pairs. And if you think this is a slow way to trade, if you're doing a review session of 32 Forex pairs once a day, once you get good at this, you can literally do it in 10 to 15 minutes, and you'll be probably looking at maybe 1 to 5 opportunities a day. So, this is powerful stuff. On the next video, we're going to go even deeper. So I hope this was valuable.